Hello, I'm Daniel and welcome to another video reporting live here from Gothenburg, Sweden. This is not financial advice, it's just me going through my own positions and my own takes on these stocks on YouTube. So today we're gonna go through Micron. The memory outage is real and Micron has been one of the companies that has benefited from this. So we're gonna go through its stock, the valuation, what I deem to be the biggest challenges in holding a stock like this. So what does Micron do? They primarily do two things. They produce DRAM and they produce NAND flash. DRAM, which is the thing that is sitting in PCs, computers, and smartphones. NAND flash, which is the component you use for the solid state drives, the SSD drives. Also hard disks for your computers and so forth. And more recently, you have the HBM product, which is the high bandwidth memory. This is the most recent expansion in all these GPUs in order for the GPUs to be even more effective. And Micron is going to be one of the companies benefiting a lot on this. So DRAM, NAND flash, and HBM. It was founded in 1978, headquartered in Boise, Idaho. CEO is Sanjay Mehrotra, who was previously a co-founder of SanDisk. He's been running Micron since 2017 and has shifted the company toward a higher margin AI-driven product. Micron is operating within an oligopoly, which is a business or a market segment which is dominated by very few players, 1, 2, or maybe 4 players. In this case, we have 3 very dominating players. We have Micron, we have Samsung, and we have SK Hynix. So why is Micron so cyclical? Why does it have such aggressive booms and busts? The reason for it being is there's really no differentiation between these companies' products. So it's all driven by a supply and demand cycle. And since they also operate in such a capital intensive environment, you go through these really aggressive booms and busts because you first go into a cycle where the demand is super high, prices go up, these companies makes a lot of money, then they upproduce their ability to create even more of these products. When suddenly the demand cycle takes off, they stand there with a lot of supply, a lot of ability to supply the market, and then you have to wait until the next cycle for them to be able to produce with this new beautiful fabs and equipments and everything they have invested in full speed. So this is the reason why you have these aggressive booms and busts. It's a capital intensive market. It's very few players in the market. So when the demand goes high, supply is short and they can raise the prices, make a lot of money. And then the demand goes down again and we have an oversupply of things and it goes on and on and on. What's interesting with Micron is when you read up about the company and you're not aware about the cyclicality, you see, David Tepper is buying aggressively into this stock. David Tepper is such a smart human, probably a good thing. You read up about the company, it's selling about 8 to 10 forward PE. 8 to 10 forward PE, that's crazy. It sounds really, really cheap, right? But the thing is, when these kinds of stocks is priced in that low, the market is actually pricing in the fact that they won't be able to keep up with these high margins, high earnings. Okay, so if we look into the last 6 historical cycles of Micron, you have the first cycle, which is the most crazy one. You have the dot-com boom. Between 98 and 2002, it climbed from $10 up to $95, 850% gain. And at that time, the market was actually paying between 45 and 55 times earnings, which is crazy high. Then everything crashed and it went down to $5, 95% collapse. Okay, that was the first real cycle you can look here at Micron. The other cycle, which is between 2002 and 2009, this was really like a fake cycle because they didn't really earn any money between these times. So it was purely speculative driven cycle. Not that interesting. The next cycle is pretty interesting between 2009 and 2016. Then the stock goes from $2 up to $35. That's a 1600% increase. This was during the iPhone era, Android explosion, and the shift to solid state storage. At the 2014 peak, you just had to pay between 8 and 9 times earning. That's about where we're at right now. And then it crashed. Yeah, so as we can see here, we have here's a 75% drawdown from the 2014 peaks down to 16. Then we have the next boom, 16 to 19. We have $10 to $64, a 540% gain. So that's a 590% increase. Then you have one drawdown, 50%. And the next race goes pretty much all the way to 24. And then 24 to 25, 60% drawdown. And now we have the most recent run up. From 25 up till now, it's a 600% gain here. So interestingly, before it went down the last 50%, you only bought it for 4 to 5 times earnings. But then it dropped 50% before the next race. And the next run up, 19 to 23, went up 300-400%. You paid between 9 and 10 forward earnings. And now we have the most recent run up, $49 up to $430, and you pay about a 10 PE for the stock right now. It's really a go hard or go home type of stock. It's not for the faint of heart. It moves fast, it moves aggressively. This is the first thing I get to know when looking at this stock more deeply. And the other thing is the fact that even though it looks really cheap, it's not necessarily cheap. Because it's really aggressive on the downturns as well. And if you want to play these things, it feels like you need to buy it when the pain is pretty high and the stock has gone down quite a bit, because it seems that the stock is actually doing that from time to time. So let's say that you would like to invest in Micron and you would like to know how to do it more properly, then you'd have to build up the skill of looking at DDR5 spot prices. If I would invest in this company, I would need to build up some kind of system in order for me to easily look up these spot prices, because this is a routine that I have never done before. But if I would to feel confident in this kind of investment, I would need to build up some kind of system to check up on these DDR5 spot prices. This is a huge thing for this business, because since it is a commodity that Micron and these other two companies are selling, you need to stay hyper vigilant to the prices of the actual thing that they make the most money on, which is a DDR5. Then you would need to check up the manufacturer inventory weeks. So you need to look up. The next thing that you would need to look on closely is the manufacturer inventory weeks. So let's say for these companies, these three oligopoly companies, you want them to really have low weeks of supply in their supply chains. If the inventory weeks go up, it's a sign that they are overproducing and they're not emptying their shelves, so to speak. And you need to be very vigilant about the hyperscaler capex guidance. And on that point right now, it feels like all the big tech companies, they're hiding their guidance. They can't service their need as it is now. So all of that feels good at the moment. But as it is right now, the market is pricing in a downturn in these companies. And generally, they have been pretty good at seeing these things. This cycle could be different. So the market and the bulls for Micron is arguing on the HBM being different. It's going to take this kind of supply chain to be not so cyclical into being a more contract driven thing, more like the TSMC economy. But betting on that things should be different or it's different this time, that kind of language is not in my ballpark for investing in companies. So that makes me a bit weary. So if I would to invest in this type of companies, make sure that you have some kind of system in checking out the DDR5 spot prices, look into the manufacturer inventory weeks, and keep a really, really sharp eye on the hyperscaler guidance. And of course, listening to Micron's own language. But when you start to hear the management talking about softness in any of these things, then this stock will move aggressively. So I would deem that to be a bit too late. You have to make sure that you have some kind of feel for these other points. And of course, you should listen in to Micron's earnings calls as well, but that is like a thing of last resort, really, because you don't want to get burned if you don't have to. So for me, generally, I would recommend to wait these things out. And if you would like to invest in this type of company, dig down deep to learn about the company and its cycles, and then maybe buy it when it's really beat down. Because Micron is a huge part of the tech company, and it seems to be opening up possibilities to buy Micron in different periods during the 10-20 years that I've looked on. It's aggressive stock, up and down. Yeah, it's probably a good pick for the future sometime, but as of right now, it's too high for my tastes. So that's it for this video. I hope you found it to be somewhat useful. Do you have any comments? Drop them down below. Elsewise, you have a great day.